Hi there, welcome to Kneppy Invest, and welcome to April 1st, 2025, April Fool's Day. Don't forget, for those who don't follow the calendar, and I'm hoping that those who don't follow the calendar all that closely, and a lot of times I don't, hopefully you did not fall for any pranks, including my own. I'm really hoping my prank was sort of fairly obvious, particularly if you watch the video all the way through. But you never know, someone could have fallen for it, and I'm now shocked that I am now issuing some videos. So I'm always appreciative of those sort of pranks that don't really harm anyone. No one's harmed in making that sort of video. And probably my favorite prank of all time is probably the spaghetti tree prank by, I think it was BBC back in the 1950s. So back then, this was in England, spaghetti was an exotic delicacy, if you can believe that. So I think the people of England in those days were fairly ignorant around spaghetti. And so there was a story that BBC did produce and release, and a lot of people actually did listen to this or watch it. I'm not sure if it was probably on the radio, and they just told people that you can grow spaghetti on trees, and they're talking about cultivating spaghetti on trees in Italy, that sort of thing. And they did receive a lot of replies asking how can the people of England grow their own spaghetti? And if I remember correctly, the response by the BBC was to get a tin of tomato paste or something and put something in that to grow spaghetti. Anyway, so that was probably one of my favorite pranks of all time in the 1950s, 1957, if I had to guess. I'm just making that up. I have no idea which year it was, but I still remember when I first heard about that, and that was quite a few years ago, and it still remains in my mind. Anyway, so no pranks in this video. This is real stuff. And we've had a pretty good day on the market today. No complaints from me. And this is from a good lead in from Wall Street. We also had RBA release interest rates today. Well, not release interest rates, but whether they're going to keep interest rates where they are or lower interest rates. And I don't think that really shocked the market. Also, we had consumer spending data coming out today, probably a little bit weaker than expected. And we have seen the market jump in the last few hours, which is interesting. So initially it fell and then it's jumped. Now, Wall Street overnight was really interesting because Dow Jones was down 1% on open and then rallied during the rest of the day. So it was up about 1%. And we just don't know what's going to happen tomorrow. We have no idea. It wouldn't be surprising if Dow Jones was down 2%, NASDAQ down 3%, or maybe up 2 or 3% tomorrow. We just have no idea. And that is a problem right now, just a lot of uncertainty when it comes to the markets and a lot of other stuff, including macroeconomic news. Consumer spending, we're starting to see that falter in the United States and maybe even here. And people, because of that uncertainty, people are putting off spending. Yeah, they're putting off spending, which is a real concern. It should be a real concern to the government of, Australia, but particularly United States. Now, I did see a really interesting tweet. This was apparently a Reuters article in regards to China, Japan, and Korea coming together to respond to Trump's tariffs. And that is really interesting. I'll talk about that particular tweet in a second or so. And then after that tweet, we'll have a look at the ASX today, the best and worst performing companies, and also sectors and indices, of course. And then we'll have a look at the top 5 stocks of the day. Number one was a no-brainer. Share price of this company is up about 160%. Fairly small company, and that is a theme for the top 5. Fairly small companies, a couple of mining exploring companies, I think, and also a company that has just announced they announced the capital raising, I think it was yesterday, and they announced the details of the capital raising today, and shares are back to trading. And also talk briefly about a few companies that did not make it in top 5, about 5. And then we'll have a look at one of your comments at the end of the video. Okay, so let's have a look at this tweet, which I found intriguing. I'm not sure if I absolutely believe it. So breaking. This is from Reuters. The People's Republic of China, Japan, and Korea have reached an agreement to collectively respond to Trump's tariffs. Now, I worked in Japan for about 9 months with it was a company that its clients were companies throughout the world, including airline companies like Korean Airlines, Qantas, or the Japan Airlines, a lot of shipping companies as well. And I did work for the aviation sector, so I dealt with all the airlines, including Korea Airlines. And the one thing I remember is the main thing I remember is I went into a meeting once, and I actually called the Sea of Japan, to Korean Airlines officials, because that's what it's named, Sea of Japan, and they were peeved off. Yeah, it's probably the best word. They were peeved off. How dare you call it Sea of Japan? And that's when I started to really realize the amount of friction between those countries in that area, Japan, Korea, and China. And if you do look at the history of these three countries, a lot of animosity. Yeah, a lot of animosity between those three countries, and that still exists today, which is really interesting because the company I work for had representatives from all these countries, and everyone got along fine. Everyone got along absolutely fine. So I worked with people from Japan, Korea, China, Taiwan, also France, United States. It was just a big collection of people from all over the world. Those who did not actually come from Japan were not expected to work more than 8 hours, but those who came from Japan were expected to work more than 8 hours. In fact, many of them worked between about 14 and 16 hours a day, but the rest of us, they didn't care how long we worked. Well, they had to be at least 8 hours a day. But anyway, even though everyone got along really well, it's just culture. Yeah, I don't know. Individually, everyone got along well, but collectively, yeah, they don't like each other. Anyway, that's what my main takeaway from that time working in Japan. So this is really interesting that they're coming together because of Trump. So maybe this can be Trump's greatest achievement, to bring all these countries together. And that actually could be really beneficial for the world. Who knows? Maybe that means Taiwan will never be invaded by China. Anyway, so a really interesting tweet. I find it fascinating. The first comment was, not a chance this is true. And that would be my first reaction, just because of the relationship between these three countries. But again, it's Reuters. Maybe this is a real thing. Anyway, on to the ASX today. A pretty good day. And I'm expecting everything. By the way, there's only about 23 minutes left of trading. So we've had a nice little rally after. Yeah, it was a really interesting day because it opened up high, maybe 0.5% high, and then during the first 2 or 3 hours of trading, the markets, or the indices, just dropped until about midday, and then we saw them rally. So all the indices have rallied from about midday. Was that because of interest rates announcement from the RBA, or maybe the consumer? The consumer, was it the consumer? Retail sales growth below forecast. Maybe that excited the market, because the market now is saying, "Wow, if retail sales are worse than expected, that means the economy is corrupt. That means there's less chance of interest rates rising." But it's the complete opposite. That means the economy is crap. So that's actually not a good thing. So the market seems to be more focused on interest rates than anything else, and I think that's the wrong thing. But Australia has kept their cash rates as expected. Yeah, so I think there was a very small chance of it decreasing. The commentary was really important as well. So there is a possibility the market rallied today because of the commentary. And hopefully in Trading Economics, they do mention, here we go, the central bank expressed growing confidence that inflation is moving sustainably toward the midpoint of its 2 to 3% target range, as high interest rates have helped bring aggregate demand and supply closer to balance. However, the IBA also highlighted uncertain economic outlook for both domestic activity and inflation globally. Risk remains significant, driven by geopolitical and policy uncertainties such as US tariffs. The committee also kept the interest rate on exchange settlement balances at 4%. So because of that uncertainty, there's no reason to change interest rates at this point in time and for the foreseeable future, to be honest with you, because there's a chance if things go badly, they might have to increase it. And so there's no point decreasing and then have to increase it. That's just the way I feel at this point in time. Other macroeconomic news, China manufacturing growth hits 4-month high. I don't really care about 4-month highs, but if we got a 4-year high, that would be fairly significant. Japan business sentiment weakens in Q1. So that is a little bit interesting. South Korea manufacturing contracts for second month. And yeah, South Korea exports rise less than expected. Okay. So let's go back to the ASX today. Look at the best and worst performing sectors. So everything's up. All sectors are up. It's interesting that we're not up all that much, but if you look at the sectors, we should be up by way more than 1%. So maybe it's the biggest companies on the ASX that have been a bit of a drag on our indices, and we can see that by ASX 20. No, ASX 20 is up 1.16%. Yep. Gold's up slightly, 0.5%. Small caps, they have been a drag on our indices, only up 0.03%. No love for small caps. Don't know why. Let's have a look at the ASX 20 just to see maybe one or two companies down. Not many. One company down. Which company is down? We have a 5% chance. Well, we have more than that because I can see which companies aren't down here. So we have a 5% chance of choosing the company that is down. No, it's 1, 2, 3. I can actually see 1, 2, 3, 4, 5, 6, 7, 8. I can see 11 companies here, which means we have a greater than 50% chance of picking which company is down today. So what could be? Now I'm just having a look at NAB. NAB is up 0.76%, CBA 1.1 or 1.01. ANZ's up 1%, so I don't think it's Westpac. What else is there? I'm trying to think what else. What other companies? What about no. What about no? What about Woodside? I'm going to say Woodside's down. Let's have a look. Oh, it's Westpac. Ah, dang it! I just thought the other three banks are up big, so Westpac should be up. And where's Woodside? Well, Woodside's had a pretty good day. I should have looked at energy up 1.69%. Oh, there we go. Westpac only down 0.1%. Who cares? So best performing companies have been Goodman Group, QBE, BHP, Fortescue. So nice bounce in iron ore, it seems like. Okay, so let's turn our attention to the top 5 stocks of the day. No, top gainers. Don't forget top gainers. Let's have a look at top gainers. And Whitehawk, the no-brainer stock of the day. Share price up 143%. Markup is only 12.66 million. Interesting announcement, and I'll talk about that in a second. Ozaurum, that's my second stock of the day. There you go. So the top 2 are the top gainers today. So Ozaurum Resources and anything else I want to talk about here? No. There's Merino & Co. I was mentioning Merino & Co. probably about 3 or 4 months ago. Share price all over the place. It's now down below 20 cents, but up 16% today on $14 traded. We think we can move on. Oh, Pentinet's up. Go Pentinet. I think it's interesting. Pentinet has dropped a lot from its quarterly results, which were really good, cash flow positive. And if they release another really good quarter, I think this reaction for the market has been stunningly bad. A really bad reaction for the market. Well, lack of reaction for the market. Maybe that's the way to say it. So it's going to be interesting to see how Pentinet has performed in the March quarter. And they should be releasing that hopefully within the next 3 to 4 weeks. Okay, so let's move on to the top gainers by market cap. Black Cat Syndicate didn't make it to my top 5, but I will talk about that. Southern Cross Electrical Engineering. Oh, that is interesting. So I was very close to selling this. They announced an acquisition yesterday. Share price did go up a little bit, maybe 6-7%. And we've seen another good day for this company. Share price reached a high of about $1.86 and has pulled back a little bit. So there is a bit of resistance at that level. And so a nice 2-day reaction from or for Southern Cross Electrical Engineering. In fact, the best reaction has been today. So I'm glad I did not sell out of that cut. That would have been a bit of a bummer. But even though I did not sell out, I really want to see the share price break out to a new high. Really want to see that for Southern Cross. Okay, so let's go back to the top gainers. Mika Metals, no complaints from me. AV Jennings has been bought out or something, takeover bid offer. And Cyclopharm is also in my top 5 stocks. So we already know Whitehawk, Ozaurum, or Ozaurum, how we pronounce it, and Cyclopharm. 3 companies in my top 5. Now on to the top losers. And we'll see if 2 of these companies are in, the other 2 companies in my top 5 might be in the top losers. And yes, they are. Caprice Resources down 31% on pretty big turnover. And that is company coming in number 4. So we can move on. And now we just need company number 5. And maybe not in the top losers by percentage change, but maybe in its market cap. Other than that, there's nothing much happening in the top losers. Oh, no, there it is. Medadvisor. There it is. So Medadvisor, number 5, down 12.73% on the back of a capital raising. And interesting capital raising. I'm like, interesting reaction from the market as well. I thought the price they set the capital raising was not that bad, but share price is actually now below the capital raising price, unless I read it wrong. Now, the top losers by market cap, you're going to see a lot of uranium. The reason I know we're going to see a lot of uranium is because I went through Capital Brief just before I started recording, and there it is, uranium miners sink on US tariff fears. There you go. And so, lo and behold, we have uranium at the top. Paladin down 6%, Deep Yellow down 7%, Bannerman down 10.8%. Where's Peninsula down 6.29%? A few of these other companies might be uranium companies as well, but there you go. An environmental group, which was featured yesterday in the top 5, with just like Southern Cross, they made an acquisition, share price, however, down 6% for that company. I did prefer Southern Cross Electro Engineering's acquisition over environmental group, and looks like the market agrees with me today. And Andean Silver, did they release something today? I have a feeling they did. So this is what I missed. I'm pretty sure they did release something today. Yeah, Cerro Bayo resource increases by 22% to 111 million ounces. Market doesn't like that for some reason, or maybe silver was down. I can just see, have a look at silver mines. No. And Adriatic. No. So obviously the market has not liked Andean Silver's little increase in resources. Let's have a look at the chart for this one, because I'd say the chart does look okay. So this could be a buy the dip situation. This could be the sort of situation where people are selling out and then by tomorrow, or they've all sold out and the share price bounces. The chart still looks pretty good. I do like this chart. But again, it's going to be the, I'm going to get rid of this downtrend because that's come to an end. It's all going to be related to the price of silver. If silver just goes down 50%, Andean silver share price will go down by more than 50%. So it's one of the reasons why I'm not the biggest fan of mining companies, is because they're beholden to the underlying commodity they are mining. And I think that might be it for top losers and top gainers. So we can move on to not the top 5 stocks just yet. So I've just noticed the market is starting to drop a little bit. Got to close to 1%, the XGO. Now it's only up 0.9%. Now let's have a look at a few companies that did not make it in the top 5 fairly quickly, I think. Yesterday I did mention Rocketboots. Share price of this company was up a fair bit yesterday, 20%, and that was after an acquisition. And another company called LGM, Legacy Minerals, share price was up 23.6% yesterday. And after recording, I went through my emails and I noticed that Rocketboots was written. There was a write-up on Rocketboots, or maybe they made an acquisition of Rocketboots. This was Next Investors. They sort of hinted at this, not the company itself, but they were hinting of making an acquisition or something, I forget, of buying some shares in a company. I forget what exactly the email was. And that turned out to be Rocketboots. So that's why share price was up 23.68% yesterday, because, of course, people can't think for themselves. And Legacy Minerals, this one, was mentioned by East Coast Research. So that's why the share price of these two companies popped up yesterday, just because they were mentioned in an email. And I still don't understand why people buy on those sort of recommendations. Still don't understand it, but it works. Let's have a look at the charts for both of those companies. Rocketboots. Still, the chart still doesn't look that good. I think I looked at this yesterday. And LGM. Yeah, actually not a... It's okay chart. So really nice volume yesterday. But the problem with the nice volume yesterday and the shop popping up, it's on the back of the wrong thing. I need that back. I need that catalyst for share price rising on large volume to be something substantial, something that is powerful, strong, something that is not weak, like someone recommending the stock. I find that to be a weak reason or catalyst for the share price to be rallying. I need financial, something really positive financially. That would be the catalyst I'm looking for. That is the catalyst I'm looking for. But anyway, for those who can't think for themselves, maybe you can join up East Coast Research and Next Investors to get their idea and put their idea into your portfolio. Okay, a company called, I don't know how to pronounce this, Artrya. They did release not the most interesting announcement. In fact, the share price is down. So Artrya secures contract with Loomis Imaging. I actually did have a look at this announcement. It didn't really trigger anything in me, but then I had a look at the chart and I went, this is a chart that I do like. So this company listed back in 2021, share price dropped immediately from then, found a nice little base over about a 2-year period and started to climb upwards back in late last year. So September, October last year, the share price was about 30 cents. So share price has more than doubled since then. Now, unfortunately, it's on the back of no real significant financial numbers. And the reason I say that is I did have a look at the most recent Appendix 4C. I just wanted to see if the company was, or how much the company was generating in cash flow or receipts, and $15,000 in cash receipts and still burning through a lot of cash. So when I look at this sort of chart, and I've seen this chart, this sort of pattern before a lot in the past, share price goes down after listing and then starts to turn around like this, sort of like a, if I can draw it, it's, I don't know if I can draw that sort of, look, I want to draw a line. No, that's not what I want. But I can bend the line. There should be a way to do it in TradingView, but I've never done it before. Maybe just draw. I could just draw. Brush. So this sort of pattern here. Oh, like that. It's like a rounding top. Sort of like a, there is a tea and cup handle pattern, but you need the handle here. This is just sort of a rounding base, that sort of thing. I don't know what you call it. I do like that pattern, really like that pattern. I've played this before quite a few times, but those times I've played this sort of pattern were companies that were real companies. There was no story behind them. They were profitable, growing, that sort of thing. And I'm not sure Artrya is there. In fact, I'm not even sure I have this company on my watch list. And I can't even put it on my watch list because they don't have that capabilities. Anyway, so it's Artrya. I forget what they do, but something to do with imaging. And notice here, secures multi-year contract with Sonic Healthcare. So there is a chance that a lot of the cash flow will start to increase because of these multi-year contracts with Sonic Healthcare, and also the announcement today secures contract with Lumis Imaging. So I just need to see that coming through to the bottom line before I get too excited. Anyway, move on to, Black Cat Syndicate. They bought some sort of processing plant or something. Processing commenced at Lakewood. I'm pretty sure this was the acquisition of a processing plant. Yeah, I'm pretty sure it is. So they're pleased to announce completion of the 1.2 megaton per annum Lakewood processing facility acquisition, now part of the Cow East Gold operation. So a nice announcement. Share price up a fair bit, 8.3%, and the chart is stunning. A beautiful looking chart. This is sort of company, small gold company I do look for. And your beautiful chart. The beautiful breakout occurred in April last year, so it's on about a year ago. The share price was about 24 cents. So share price has quadrupled in the last year. So beautiful chart. Study this chart. It's a gorgeous chart. And the other thing is never forget to look at the volume. Look at the increase in volume as well. That's another good sign. And what that is telling me is that fund managers are becoming interested in this company and more interested. So that's happened all within the last year. So that's Black Cat Syndicate and Opthea. So Opthea did release something yesterday. So not trading yet. So Opthea did announce its decision to discontinue wet AMD trials. This, I think, if I remember correctly, was a joint decision between the company's management and the DFA investors. So I'm not sure what's going to happen moving forward for this company. And I don't think, is that the right announcement? Yeah. I don't think that the company even knows, the management even knows, but no longer doing these trials. So it's Opthea. Now to the top 5 stocks of the day, starting with Medadvisor. Share price has collapsed over the last 6 months, maybe 6 to 9 months, and that has aligned itself with the financial performance of the company, which has been fairly weak. And they did provide some numbers in the announcement today, the corporate update and equity raising. Share price has dropped a fair bit, and it was just the timing. Now, the share price did bounce a little bit, and I was thinking, you want the capital raising not at a massive discount. And I thought it wasn't a massive discount. So the share price yesterday was 11 cents, or the day before was 11 cents before they announced this capital raising. And probably my main concerns would be if the capital raising was like at 8 cents, which would be a pretty big discount. But it wasn't. It was 10 cents, I think, if I remember correctly. You have to dig deeply, by the way. 10 cents. Where is it? Here it is, 10 cents. So yeah, share purchase plan will be issued at 10 cents per share. So that's not a bad, that's only a 10% decrease from discount from where the share price was. Now, the other interesting thing is the reason they're doing this is if you have a look at this, these numbers here. So they've got the financial year 23 numbers, financial year 24, and then financial year 25 expected numbers. And they are expecting a pretty big decrease in revenue, gross profit, not gross margins, and EBITDA from last year to this year. So this has really put a dent in the chart and the share price. They are expecting to return back to growth in financial year 26 and 27. Do they mention that somewhere here? Somewhere maybe? Yeah, so they're targeting organic revenue growth of circa 15% and margin expansion. If they do achieve that, I do think there might be some value now that they have done this capital raising. Not a big capital raising, only like $5 or $6 million. And that is a concern that the company just needs this money. And yeah, so that's concerned how the company is performing. But if you have trust in the management, faith in the management, they can, you know, go back to profitability. Maybe now is the time to think about buying some shares in this company. So let's have a look at the chart for Medadvisor. And I think I did mention probably the best time to do a capital raising was back in July last year, not that long ago. So share price did reach a high of around about 58 cents back in July last year. So we are talking about, what's that, 9 months ago? What's today's, what is, no, 8 months ago. No, it's April now. So that is about 9 months ago, not quite 9 months ago. And the share price since then, 9 months ago, so in 9 months, the share price has dropped from 58 cents to 9.6 cents. Now, when the share price was rising, there were people saying, I should be trading this. I'd got a few comments, and I was thinking, no, I thought it was too expensive at those levels. And now I'm thinking complete opposite. I'm thinking there might be some value here, but I need to see a bit of a turnaround because this chart looks awful. It's an ugly looking chart, and the share price just keeps on dropping. So that's Medadvisor. Maybe this is the bottom. Maybe this is the bottom. Maybe the low has been reached. Coming in number 4, we have Caprice Resources. Share price down 31%, and possibly because we're in a closing auction, down even a little bit more. And they did release announcements in regards to some grades at their Island and Gold project. Exceptional high grades returned from Island Gold project. Well, the market doesn't think it's exceptional, unless the market thinks exceptional is a different word. Or maybe management doesn't understand the word exceptional. I actually did have a look at this one because there was another gold exploring company in my top 5. I sort of wanted to compare the grades, and I didn't see a huge difference between these two companies. So again, even though I can read in an amateuristic way drilling results, I still sometimes don't understand why the market reacts the way it does. So the market didn't like these drilling results, and we know just because the market reaction. Now, if you have a look at the chart for Caprice, the share price had been rallying. Yeah, look at that. Massive jump in share price on the 12th of February, up 161.5%. And that was on the back of the 12th of February. So if you go back 3 months, exceptional high grades up to 34.9 grams per ton gold at Island Gold. So that's the same one. So it seems like initially pretty good grades, and now the market is like, whatever. So that's how we get this chart. Before today, the chart looks really good. So although I wouldn't have bought on the back of yesterday because share price was up a fair bit, you could maybe argue this is just a little bit of selling, profit taking, and maybe the results weren't that bad. But yeah, down 31.4% on pretty big volume as well. So maybe this is the end of the fun times for Caprice Resources, which, let's have a look at the market cap for this company. I would assume it's fairly low. Yeah, 29.84 million after drop today. Okay, coming in at number 3, we have Cyclopharm. And they hit a milestone. The market likes it, well, today. Share price has been under pressure the last month, 2 months. We'll have a look at the chart in a second. Technagus, US momentum accelerates with $1 million sales milestone. So you see the word Technagus and you just think, well, this company must be producing tech software for casinos. Technagus? That seems like legit. Anyway, $1 million sales milestone. So I suppose that's exciting. 1.6 million Australian and expanding installed base. Each Technagus installation generates recurring revenue through ongoing consumable usage, creating a sustainable annuity income. I do like that. And the US has now become the 4th largest revenue generating market of the 66 countries in which Technagus is used. So there are some reasons to actually like this company. Technagus, by the way, is a structured ultra-fine dispersion. The technology is an structured ultra-fine dispersion of radioactive labeled carbon produced by using dry technetium 99 meters in or 99 m in a carbon crucible microfurnace for a few seconds at around 2,700 degrees Celsius. Anyway, it's a radiopharmaceutical company servicing the global medical community to provide nuclear medicine and other clinicians with the ability to improve patient care. So I'm not a big, by the way, achieves this objective primarily through the provision of its core radiopharmaceutical product Technagus used in functional lung ventilation imaging. So most of that just goes way over my head. That's why I always have to look at the about section when it comes to these sort of companies. Anyway, so this product is gaining traction in the United States, and that is exciting. However, the chart for this one has looked pretty nasty. It looked really good and then turned nasty fairly quickly. And that is a little bit of a turn-off for me. So there it is. Share price looked like it was breaking out back in January. Share price got as high as 250. A really good breakout or potential breakout on the 6th of January. And then all of a sudden, share price just dove. So even though the share price has rallied 2% today, I'm not sure if I can believe it. The other thing is the volume has been fairly weak. So the market really isn't that excited about this announcement just because of the volume. But it is some good momentum possibly for the company. By the way, we'll have a look at the most recent results. Well, they issued, there it is, preliminary final report on the 25th of February. I actually have not had a look at their results for the first half, or maybe whatever. Is that preliminary final results? Yeah, final report. So this is full year results. So revenue of 27.6 million. It says the loss was 13.2 million, but is that a real loss? Technagus sales increased by 5.4% to $15.2 million. So not a big increase in Technagus. So maybe because they're gaining traction in the United States, maybe that would or will lead to some increase in, or significant or better increase in revenue in the next year. I'm just going to quickly go down to the results. Here we are. I just want to see why they had a big loss. Is there one-off? No. Looks like that loss is legitimate. And I suppose the revenue increase wasn't that crash hot. It's a fairly small revenue increase. So you probably want to see the company making more traction at this point in time, but looks like they might be doing it. Cash flow. Yeah, operating cash flow negative by 12.6 million. So I need to see something more from the company before I get excited. Okay, coming in at number 2, we have Ozaurum. Ozaurum. So 2 Australians and rum. Ozaurum. And they also released gold drilling results. RC Drilling confirms high-grade gold at New Cross Fault. Completely different reaction than Caprice. Share price up 35.38% to be one of the best performing companies on the ASX today. I also had a look at these results and they didn't really stand out to me. I didn't really, AU, gold. I just kept thinking, so that's Australia gold rum. I kept thinking AU is also Australia, but yeah, it's gold too. And I don't know. Maybe it says the drilling has successfully confirmed the presence of high-grade gold mineralization over a substantial 400-meter strike length. So maybe it's that's really causing the assignment. 400-meter strike length, because I do know that's important. But all the numbers here didn't really make me that excited, but the market excited. So let's have a look at the chart for Ozaurum, OZM. And this has been on my lists. Ooh, oh, that's right. I remember this one now. So the share price popped up not that long ago in regards to other drilling results. Share price went on a massive tear over a short period of time. Share price went from like 6 cents up to 18 cents, three back, and then dropped all the way back down. It leveled off. So all the selling came to an end probably around about start of March. A small amount of selling in middle of March. And yeah, so if I was trading this, be aware, because now could be a good time to buy. Maybe now's the time share price could go on another run. But just be aware that a lot of shareholders bought in higher prices not that long ago, so there could be and will be some resistance moving forward. You need to, if the share price keeps on rallying, you need to see a lot of interest and a lot of volume coming through to take aboard all those shares that will be sold off from those other shareholders. Okay, so that's Ozaurum. Coming in number 2, Whitehawk. Whitehawk, something to do with cybersecurity. Share price up 225%. You could have bought this morning on open at 0.8 cents. I wouldn't have, because the share price is below 1 cent. I completely ignore this company. Pretty big volume coming through, 197 million shares traded. I think that's pretty big compared to history. Let's have a look. Yep, 197 million shares traded. Yesterday it was 2 million. Day before that, 305,000. And some days, not much at all. Now, some other days there's big volume coming through, but typically not much trading. Okay, so why is the share price up 225% for Whitehawk? Because they're forming a relationship with the US government. Yep, that is right. Key subcontract position secured in 10-year US government contract. Now, you might be saying, why did the share price open at the same price it was yesterday, 0.8 cents? That's because they released the announcement at 10:15 a.m., just after the market had opened. So there would have been some selling and buying before this announcement was made. Can you imagine? You sold your shares. You've been a shareholder of this company for many, many years, and you couldn't handle it anymore. So on open this morning, you just sold. 15 minutes. That's all it was between you selling your shares and making 225% increase. I want to see if there was much selling just before. Yep, not a lot. There was maybe one or two trades. The share price, after the announcement was made, the share price only opened at 1 cent. So there were some very savvy people who saw potential in this announcement. And yeah, the share price then rallied. A lot of trading after that announcement. So I wonder how long it took for day traders to get a hold of this one. So a pretty good day for Whitehawk. And this particular announcement is interesting. No real numbers attached to it. Now, they did release an amendment. I wonder if they changed things in it. So 10-year contract, one of 8 teams awarded some sort of contracts from 23 applicants. And they do mention a number here. Whitehawk secures key cyber subcontract position on $920 million US total contract value. How much are they going to get from that? Just don't know. It could be $9. It could be $92, $920,000. We just don't know. And that is a problem about these sort of contracts. Sometimes you just have no idea until you start to see the money coming through the door. Anyway, so interesting announcement. I did go through this. A lot of stuff here talking about executive orders. So yeah, a lot to go through here. Whitehawk provides AI-empowered advanced cyber data analytics and platforms. Teaming with Nexus Research, a small business US government prime contractor, alongside industry leaders Babel Street and Dun & Bradstreet. I have heard the name of Dun & Bradstreet before. I don't know what they do. Are they listed? Oh, yeah, they're listed. Okay. Anyway, so let's have a look at the chart for Whitehawk. Is this a breakout? This could be a breakout. And how? Yes, this is a breakout. But notice there was another breakout back in February of last year, so about 1 year ago. That fizzled out fairly quickly. So they had 3 up days in a row. Actually, no, 1, 2, 3 up days out of 5. Share price went from 1.2 cents to a high of 5.7 cents and then faltered fairly quickly. And that can be the problem with these sort of announcements. I need and sometimes would like a little bit more substance. Interesting announcement, but I need a little bit more substance. But looks like a breakout. This does look like a breakout. It's just what it's on the back of is my main concern. Okay, let's have a look at one of your comments. NZBRG1 says, as Jason McIntosh says, a lot of technical damage has been done. Now, I did get an email I did receive an email today because Jason McIntosh via, I think it's Self-Wealth. So Jason McIntosh is a motion trader and he does a video every single Tuesday with Self-Wealth about technicals. A really good listen. I do recommend listening to him. I do gain a lot of knowledge from just listening to him. And we do think alike. So that can be a bad thing, that can be a good thing. But because we do think a lot alike, I do take a lot from him. But I also like to get different points of view as well. So I try to get different points of view. And on occasion, he will have a different point of view. But we do think of like, so he's wary it now, I'm wary. And based off maybe his today's session with Self-Wealth, he says a lot of technical damage has been done. By the way, I'm just going to do his name, Jason McIntosh. There it is. So yeah, motion trader. And there's his videos. There it is. 1 week ago. In fact. Oh no, he does too. So this is his own videos. This is his own videos. And then I also, he releases these on the weekend. So there is 3 days ago. You can see I've watched, don't watch it every week, but I have watched the last 3. But he also does a Self-Wealth one. And I'm pretty sure Self-Wealth, I don't think a lot of Self-Wealth people would be interested. There it is, Technical Analysis Live. Only 260 views. Yep. So I was going to say, I don't think a lot of Self-Wealth people would care about technicals because I'd say a lot of investors in Australia know nothing about technical analysis. So only 260 views. Last week, 979 views. But this one's a good one. They go through a lot of individual companies' charts, a little bit longer, so 1 hour and 24 minutes. Though his own videos that he releases every weekend, a little bit shorter, about 25 minutes long, but a lot of stuff you can get out of that. Anyway, so I do highly recommend Jason McIntosh for a listen. So thank you for that, NZBRG. And then below all that, a lot of comments in regards to my 2. In fact, yeah, if we go to my videos, '89 likes, the I'm done one. There you go. A couple of people didn't like it though. Ooh, 3 thumbs down. 89 thumbs up, 3 thumbs down. Ooh, someone didn't like it. Oh, sorry. In fact, I'm going to refresh this because I want to see if that's up to date. Oh, it's got 1,000 views. Well, up to 91 thumbs up. You have never received 100 thumbs up before in any of my videos. So go thumbs up. Anyway, that's it for today. And don't forget, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.